Hello everyone, welcome to GBRC College video lecture series. In this video, I'm going to discuss the creative accounting, the remaining part that is reasons for creative accounting. Okay, so what are the reasons for creative accounting? Let us discuss one by one. The first point is that income smoothing. See, the business entities prefer to report a steady and consistent growth in the profit when compared to widely fluctuating profits from one year to another. Okay, so one of the reasons for this is the fact the investors are normally ready to pay a premium for stocks of the companies which have the record for steady and predictable earnings stream than for the stocks of the companies which report volatile profits fluctuating from one year to another. Yes, so methodology of income smoothing is in the form of postponing the recognition of revenue to the next year, which is predicted to be a difficult year. Okay, so it may also include postponing the accounting for certain expenses of the current year, which is difficult year to the next year. Okay, which is hoped to improve in the next year. However, with the intention of reporting steady and consistently improving profits, the companies resort to manipulation of their accounts. Okay, so second one, that is income based taxation system. Income based taxation system. What is tax? You know very well. Tax is a compulsory payment made by a citizen without expecting anything from the government. Okay, so income based taxation system, it is one of the reason for creative accounting. Why? Because the business entities are required to pay tax on their profit at rate specified by the government. Okay, so business entities are required to pay what? Tax on their profit, and their profit at rate specified by the government. The tax liability of an entity for an accounting period depends upon two important variables, that is taxable income and the applicable tax rates. Okay, so therefore income based taxation system is one of the reason as to why the companies resort to creative accounting. Of course, this reduction in the tax liability is only in the short run and not a permanent one. The firm may have to pay higher amount of tax in the next years. Okay, so third one, that is big both accounting. So this is also one of the reason. Okay, it is a technique of earnings management wherein a business entity makes a one-time charge against its current year income with the objective of reducing its assets. It may be noted here that the reduction in the assets value during the current year lowers the expenses in the subsequent years. Okay, reduction in the assets value during the current year lowers the expenses in the subsequent years. So no doubt write-off reduces of the asset value in the books of account and result in the lower net profit for the year in which this write-off was made, in increase in the charge against the current year revenue. Okay, so but this result lower expenses in the future, which is turn improves the profit of future periods. Okay, so the primary objective of taking big both, so that is in a single year, is to see that the company reports higher amounts of profits in subsequent years. Okay, so next that is fourth one, matching reported profit to profit forecast. Okay, this is also one of the reason. So based on their past performance and also predictions about the future, the companies forecast their profit for the ensuing year. Yes, so This forecasted profit is also made public. In this type of cases, the companies usually prefer to report more or less the same amounts or rates of profit as forecasted prior to or at the commencement of accounting period. Okay, so one of the reasons is that if the actual profit earned and reported is lower than the forecast profit, the stakeholders may infer to the effect the management is inefficient or ineffective. Okay, so one of the reason is that if the actual profit earned or reported is lower than the forecast profit, the stakeholders may infer to the effect of the management is inefficient and ineffective. Okay, so on the capital market may respond adversely. Okay, for all these reasons, among others, the companies prefer to report an amount of profit which was forecasted. Hence, they resort to manipulation of accounting figures. Okay, so next one, fifth one, that is matching reported profit with analyst predictions. Yes, so financial analyst as an important import of member of financial intermediaries. Okay, make certain predictions based on the past performance and predictions about the future, about the profit of certain companies, and these analyst predictions become the base in certain cases for investment decisions by the general public. Okay, so these analysts also indirectly advise the general public about the companies whose scripts can be purchased. Okay, and the general public in certain cases act the prediction made by the analyst. Okay, so the general public who bought the shares of this firm and the analyst predictions may not take the analyst predictions seriously in future. Okay, so this affects the reputation of the analyst who may not advise their clients or customers to go in the form of shares of the in the future. Okay, with the objective of avoiding all these adverse implications, business entities try to match their reported profit with the analyst predictions by manipulating their accounts. Okay, so next one, sixth one, that is profit based managerial remuneration. Okay, so some business entities pay remuneration to their managerial personnel on the basis of the profit. Yes, so some business entities they are paying the remuneration to their managerial personnel on the basis of profit. Okay, so even the Companies Act provides for the payment of managerial remuneration based on the profit. Okay, so even the Companies Act also provides for the payment of managerial remuneration based on the profit. Okay, on the basis of profit they are giving the remuneration to the managerial personnel. This acts as a motive for the managerial personnel to manipulate their accounts to report higher amounts of profit than earned so that they can receive higher amounts of remuneration. Therefore, profit-based managerial remuneration is another source of inspiration for the management to resort to manipulation of their accounting figures. Okay, so next, seventh one, insider trading. Yes, so insider trading is the trading of a public company's stocks or other financial instruments. Okay, so insider trading is the trading of a public company's stocks or other financial instruments by the individuals who have easy access to non-public information about the company's performance, such as profit. Okay, so possible rate of dividend declaration. Okay, so it's a key information which is not made a possible rate of dividend declaration of dividend. Okay, so as the persons who are making in the company, that is insiders, have easy access to company's key information which is not made public. They are able to take right decision about the buying and selling of shares of the company. Okay, so next one, that is eighth one, to maintain or boost share price. Okay, so usually the capital market is forward looking, as the stock prices are established on the basis of the expectations of the investors. Okay, both the present and prospective, about the future earnings capability of the business entity. Okay, so usually the capital market is forward looking, as the stock prices are established on the basis of what? The expectation of the investors, both the present investors and the prospective investors, about the future earnings capability of the business entity. So as is known, the future earning capability of any business entity depends upon the interaction among many factors pertaining to the economy, industry, company, etc. Okay, so estimated profit embodies investors' perception about various factors such as growth in sales. Okay, so demand for the goods, services of the firm, competitive structure, industry environment, profit margins, cost management, etc. Okay, so whenever these determinants change, one can find the stock prices adjusting to reflect the kind of change. Okay, so next one, ninth one, that is distracting stakeholders' attention from unwelcome news. Okay, see, any unwelcome news about the company certainly affects the market price of its equity, as the shareholders may act immediately on the receipt of the unwelcome news. Okay, so the news that the company is going to lose its industry leader position. Okay, the company the company is going to lose its industry leader position shortly, or the news that there has been a substantial fall in the market share of the company, or examples to unwelcome news about the company. Okay, so if this made known to the shareholders, they start disposing of their present equity holdings. Okay, present equity holdings with fewer takers, which results in the fall in the market price of equity. Okay, so in this type of situation, the companies resort to profit inflating measures to distract the attention of stakeholders from the unwelcome news. Okay, so next, last one, to increase the borrowing capacity. This is also one of the reason for creative accounting. So usually the borrowing capacity of the business entity is linked to its capital and reserves. Okay, so the borrowing capacity of the business entity is linked to its capital and reserves. When the company's borrowing amount is nearing the maximum permissible limit, okay, so based on the aggregate of its capital and free reserve, it resorts to manipulation of its accounts to report higher profit and retain major portion of in the company. Okay, so itself which ensures that in the increase the amount of reserves, the increase in the amount of reserves, increase in the aggregate of its capital and reserves, thereby increasing its borrowing capacity. This is therefore another reason for manipulation of accounting figures. Thank you for watching. So remaining things regarding this chapter will be discussed in next video. Thank you for watching once again.